Welcome to Your Money with Leo Daprile. I'm Leo Daprile, and each week on AM 570, Dan Rivers and I will talk about anything and everything to do with your money. If you ever have questions, please feel free to call me at 330-533-6936, or you can email me at leo@gemyoung.com. Enjoy the show.
This episode of Your Money with Leo Daprile is sponsored by Grange Insurance.
So one of the big questions for policymakers, traders alike, whether people who have left the workforce will be coming back in, is what do you think?
Yeah, this has been an ongoing conversation that we keep talking about. So many people have left the workforce. You were talking about it earlier on the show, the amount of job openings, and the data is finally starting to come out that since the pandemic, in excess of 3 million people chose to retire.
So they chose because they had that option, didn't they?
Yes. So the real issue going on with the labor force is it's shaping up to be a different conversation that we were having. We're sitting there saying all these people were sitting on the sidelines because they had all this extra money, which might still be part of the reason. But, you know, Dan, we've had a very robust stock market the last 12, 13 years, and if people have invested sensibly and wisely, people are ahead of schedule in terms of when they can retire. So there's really two components going on here. So many more people had the ability to retire younger, and the labor participation rate in the 65 and older group is down 8%.
It was always down anyway, wasn't it? Even during the Trump years. Well, I mean, basically the Obama years, labor participation was way down. Came back up a little during the Trump years, didn't it?
It did. But this is the labor participation rate for those 65 and older, not the overall labor participation rate. So there was folks there that still retired that still needed a little bit of a part-time job. So there's a lot of people that are not coming back into the labor force. So we have to now start accounting for that instead of hoping they're going to come back. So we got to look at what the real number is. And I think what you're starting to see happen is a lot of these more difficult jobs, since there's that much of a contraction of the human capital in the system, that the more difficult jobs are the ones that are becoming harder and harder to fill.
Exactly. I mean, you got some of these jobs out there that take years of experience, and I'm thinking about somebody that can write code for a computer. You don't pick those guys up every day, or those women. And, accounting, there's a lot of things that it takes a lot of experience to do. And, I think the biggest one that's probably one that we mostly know about is medical, because you have nurses that have just said, I can't do this anymore. This is just too hard. We're having to lift patients, and I can't do it. If I can get out, I'm getting out.
That's a good example of a profession that wasn't supposed to be very difficult, that became very difficult, and overcrowded in terms of patients in the system, that no one's ever getting a break, and they've been going on for darn near 18 months with this. So I see that contraction going to continue.
And even throwing money at it doesn't seem to make a difference, does it?
No. Case in point, a client was in yesterday that's retiring a couple of years earlier than he originally intended, because his investments performed to a point where he could have the conversation. And the other part of it is the way his job has changed has made it much more difficult for him to do the job he's trained to do, and putting more accountability for things that are out of his control, where he's just throwing his hands up and saying, I give. That's enough.
Yeah, enough. And it's very personal, isn't it? I mean, you can talk about what's good for the country or what we need, but people decide to retire. They do it on their own, and some of them, we got the cases of people that are going out and saying, you know what, I've always wanted to drive truck. It's not in my mode of operation, but this is what I'm going to do.
You've heard me use this term before, and it's called disengaging from your current profession and not retirement. Retirement is for people that are just completely done working and have no interest in working again. Very few people fall into that category, in my experience of doing this for 35 plus years. A lot of people still want to be productive, contributing members of society, but they're really sick of doing what they've been doing for 25 years. So there's a lot of shifting going on. A lot of people are starting, because of the assets that they've accumulated, they're able to decide to start their own businesses. New businesses are at a record pace right now. So the shift in the thinking of the worker landscape is fundamentally different than what it was a year ago.
So you have the people that have left the workforce, no intention of coming back, and they have to be replaced. One example is that truck drivers, their average age is 55 years of age, and a lot of those people will be retiring in the next couple of years. That's something that could be filled quickly, though. I mean, if you think about it, you could get somebody up to speed driving a truck, with maybe 6 months of training.
Well, is the number I heard, Dan, is that we're currently 80,000 truck drivers short. So, yes, you can get somebody up to speed quick, but we're already so far behind. And if you're going to look at it from an investment opportunity, certainly not a recommendation, but if you're looking to automate a business or automate a vehicle, I think if you're automating an over-the-road truck because there's such a glaring shortage of truck drivers, it might be a lot easier just to hire truck drivers to do the end run of that vehicle, but not the 8 hours or 10 hours or 20 hours across the country to get it to where it's supposed to.
Well,
automatically get it back and forth.
Seems like a great idea. It's probably down the road a long ways, but, you could just see something like that where you go out here to the intersection of 80 and 76 and have a big yard out there, and the automated truck comes in and people pick up the truck, and they take it over to Valeric.
That's right. Right. That end game where it's very nuanced to get the goods from here to there is where the human condition still is going to matter a lot.
I got to think that the airlines are looking at that, too, with automated airplanes, because we already are able to target people overseas, with the over-the-horizon weapons. You certainly think you could land a plane between New York and Los Angeles with automation.
I'd love to ask a pilot if we're not already there.
Yeah, pretty much, right?
I'll bet we are. I bet we're way closer than we think, but we still need that person in the cockpit because things still do go wrong.
Yeah, they do. You'd hate to be up there without it, huh?
That's right.
Yeah.
No, I wouldn't.
How many would you put up there? Would you put one or two? That's another question, right?
That's right.
Does it take two people to fly the plane? I suppose in a pinch you could do one.
Right. Well, right now with today's pilot shortage, that makes sense, right? If you can figure out how to get one.
So, topic number 2, lawmakers are eyeing the billionaire tax on capital gains. Lawmakers considering taxing the unrealized capital gains of billionaires for help in raising money. Does this mean before they sell or this is when they sell, right, that the capital gains would kick in?
No, this would be an ongoing tax on their unrealized capital gains.
Really?
Yeah.
I wonder what that was, unrealized. So, in other words, you hold it, and they would still be taking money.
So here's where that plays into, and they're talking billionaires, and if it stays there, that's one conversation. But typically the way it works, if you own individual stocks, okay, and you pass away, upon your death, your estate gets what's called a step-up in basis. So let's say, I'll make math easy, you buy a stock for $10 a share, and you hold it for 10 years, and it's now at $100 a share, and you pass away. If you sold it before you died, let me back up. If you sold that before you died, that difference between $110 at $90 is a realized capital gain that you would pay tax on. Okay. But if you pass away without selling that stock, the step up in basement for your heirs now becomes $100.
Got it.
So that's one way to do. That's a big wealth transfer strategy for wealthy people. Okay. That's
so
what
it actually triggers. It makes them take action.
Yes, but the next generation, that they can pass on a significant tax savings by not selling those securities till they pass away. But now the federal government's looking at it saying, we want to tax that unrealized gain today.
Even though you're not moving that money, they want to take it right now.
That's correct.
Yeah. What do you think about Manchin down here? I mean, I'm thinking, my opinion is that if, in fact, they twist his arm and we get this program done where we're, helping with this infrastructure, it's still going to be an awful lot of money. And it's going to be money that's just thrown out there. And, when the government gets that much money, a lot of it is wasted. And, again, this is probably going to take more money off the table that we typically would have used for for capital projects, right?
I don't know how much, Dan, but there's a lot of money from the $2.9 trillion that they've already allocated. A lot of that money still hasn't been spent. So I think part of the game they're playing is they're going to use part of that unspent money to fund these initiatives.
Yeah.
But still, it's still when there's that much money left over from your last 2 rounds of legislation, there's something wrong with your legislation.
90% of the bill is agreed on and written. That's what Nancy Pelosi says. So they're working on the last 10%. And I'm hoping that Joe Manchin holds the fort because, you know what, if he doesn't, I don't know if he'll be reelected in West Virginia.
Well, thank God he's done what he's done so far, because $3.5 trillion, even though $1.5 to $2 trillion is a lot, it's a lot less than where they started.
All right, Facebook. Let's talk about that third quarter earnings. They report later after weeks of bad news, including a legal fight with the Federal Trade Commission. What do you see for Facebook?
They actually reported last night, and they had fantastic earnings. Their only pushback was that their ad revenue was down, because now with the Apple phones, you have that option to not be tracked. So a lot of people are not being tracked. So now those customized ads that flood your Facebook page are starting to diminish.
Which I never react to anyway.
Right. But it's clogging your newsfeed every time you look at something. So they're saying that's their pushback. But they still, I think it was up 17%, still made a pile of money.
Hard to believe that that advertising is effective, because if you're like me, you basically go around these things as much as possible. You set your iPhone up that you're not being tracked so that you don't have all of these ads. But I don't know. I guess it's successful, the money that they're making.
I'm with you, Dan, because I think there's so many ads that come across me every day. I'm so desensitized to it. It's really hard to get my attention on something anymore.
I think the ones that they do sell, when they offer gadgets. Now, obviously, you and I are gadget guys, and a lot of people are. And you see some new way to get Wi-Fi into your house, or you need some way to do a piece of carpentry work, and you may bite on that. Or somebody is selling you a drone. You may bite on that. But just the regular display ads, and it comes back to the question. I was at First Energy Stadium the other night, and I was watching the Browns game, and I thought to myself, this is a utility. I wonder what their need to advertise is.
Right.
We're actually we grant them money. Now, I know they're competitive because there's other electric companies, but the distribution company first, that's a monopoly.
Yes,
you kind of wonder, what is their need to advertise? Huh?
I agree with that.
It's hard.
Right. Back in the day, utility was utility. They didn't do any of those things because we were so reliant on them.
Yeah. So with all the publicity, Facebook is considering whether to change its name to something to align with Mark Zuckerberg. Did you see this, where they want to go to Metaverse or something like that? It's incredible that they would even think about changing their name.
Yeah, and I don't get it. When you spend all those years building your brand, and maybe the whole point is they're trying to separate from the brand and do other things with the company other than be Facebook. That's the only thing that made sense to me.
How about this story that PayPal says it isn't interested in Pinterest at this time? So I'm talking to my granddaughter, and I said, take me through all of these. And she says, you folks out there, we used to use Facebook, but we don't use that anymore. I'm in college, so we use what is it? What is the one where you take the pictures and you put them out there?
TikTok?
No, TikTok is for the really younger, but there's one in between here. But she says
Instagram.
She said we use Instagram, and then she says the kids below us use TikTok, and
gotcha.
They've got all these things. So that's where we are right now. But PayPal, Pinterest, I don't know where the hell that one comes in.
My son Leo uses it all the time for recipes.
Pinterest. Mm-hmm. I'll be darned.
Right. He sees the pictures, gets the recipes. Yeah, he's very active on that.
All right, talk a little bit about your business. Both your boys are working in the business. Tell me what you guys do.
Yeah, we are a wealth management and insurance firm. Mm-hmm. So we're a holistic financial planning firm. We both, in both sides of the house, we talk about fit meetings, whether it's your insurance or whether your investments, making sure that if we're going to help you, that we're fit for each other before we even get started. It's important that from a risk point of view, and that we understand what it is you're looking for, who you are, what your needs are. Make sure that we have the resources for you to accomplish what it is you're trying to accomplish. And I'd like to say all the time that we are not all things to all people. We're all things to some people. Mm-hmm. And we find that balance with people, and it's really important because to do what we do correctly, we really have to get deep and get to know people and really have what we call the candid, vulnerable conversations. We can't dance around anything because people's lives and their financial lives and their retirements depend on us doing the right thing. So it ends up being a really good relationship. It's a very rewarding business. I love to help people. A lot of my clients have become my friends through the years because we've gotten to know each other that well. Same way on the insurance side, because and what we're finding now, Dan, is people's wealth has increased so rapidly. We're finding in many cases that their limits on their insurance is not keeping up with their wealth, so there's big risks. So we've been doing a lot more of those reviews lately just to get people aligned with their success.
Are we looking at insurance increases for homeowners? I think that came across my desk the other day.
Insurance companies are not telling us yet, because I will tell you, and this was information I gleaned from my meeting last week, the insurance industry overall right now is very profitable. So even though home prices are increasing and the cost of repair of the homes is increasing, they haven't really been wrecked so that there's not been those big significant increase in claims yet. So that's not impacting it. So we're not, in the short term, we're not seeing rate increases on homeowners from that perspective. We're seeing rates go up because we're insuring something of more value, but we're not seeing rates go up because losses are greater.
All right. If you want a guy that can help you with a comprehensive plan to your life, talk to Leo. He'll do a fit meeting with you, and you can figure out whether or not you want to do business with him. And they don't do business the first day. You get to know each other and decide whether you're right for each other. And they can do everything from the insurance end to wealth management, and they've helped me with wealth management or just finances in general. So
right.
You guys do a great job out there. And you can search for them and go to Jem Young. We'll give you your number. But if you forget the number, just go to Jem Young there in Canfield, right there on Tippy. Your information?
You can call me at 330-533-6936, or you can email me at leo@jemyoung.com.
All right, final question. Is there any correlation between the stock market and all the people out there that are looking for people to work? You got these ships that can't seem to get their cargo off. You got truckers that can't deliver the product. I'm waiting for an appliance part for now 4 weeks.
Yep.
But the stock market continues to be an entity of its own. What's the deal there?
Right now, consumer confidence is actually down, so it's actually going the opposite way of the stock market, which is unusual. So that's one thing that I'm keeping an eye on. But number two, corporate earnings so far, and this week is really the first meat and potatoes week of earnings season. The earnings that have been coming out have been robust.
Still making a lot of money.
Still making a lot of money. The one that really surprised me was UPS. They beat their expectations, because you would think with the contraction of what we think in terms of supply isn't showing up in their earnings report.
Yeah, I had to think that FedEx and UPS and USPS would have taken a big hit because Amazon started doing their own delivery, but that's not the case. Huh?
I think there's enough business to go around for everybody.
All right, very good. See you next week.
You got it.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to AfterHoursYoungstown.com.